Hello, it's Unbiased Trades here, and I will be taking you through two main cornerstones I think of trading. And I've been having a tough week or two, so I just wanted to do this to remind myself and any new traders or anyone that's getting into trading. I think this video is pretty beginner friendly. I'll take you through a recap of one of my trades as well, for people that have been keeping up with my videos every week. So yeah, first one we're going to go into is planning trades, and then the next one will be playbook, and then lastly I'll finish off with a recap. So these are the steps I take when doing planning, and obviously this is simplified. I don't want to make this video really long. If you want a really long video about planning, I can do it for you. Just leave a comment. But this is just 4 key steps I think that is very important to look for when you're planning. This is for day trading. I think it's like still useful for scalping and quicker moves, but it may differ from person to person. Doesn't really apply to swings. Take what you want if you can see anything of use for you. So yeah, the first step is the big picture. You want to be looking at the daily. You want to be able to see. So this is from a short trader's perspective. So if you're looking on the big picture, like on the daily chart, you're going to be looking for those resistance levels. You're going to be looking for those levels on the chart where they've had spikes or recent rejections, all that kind of stuff. So yeah, first you want to look at the big picture. Next, you want to look at up, and up means you want to be looking, what are the resistance levels for today. So if it gets to $4, does it have a resistance level then like 50 cents after? Does it have one at $6? Does it have one at $7? You want to be prepared for all those different levels. You never know what stock's going to go absolutely crazy, and I think it's always better to pre-plan for the crazy. So I at least do like maybe 2 to 3 extreme levels. So let's say it's trading at $5, and I think maybe it could get to the $10 resistance. So I'll put the $10 resistance, and I'll do the 12, and I'll do the 15. Like pretty extreme levels, but just to have in case. Next, number 3 is down. You want to be looking at the volume on all those levels. It does not matter if that resistance caused a huge rejection 2 weeks ago, but the volume was only 0.5 mil or 1 mil or 2 mil. That's not enough people to cause a big enough rejection there. You will see it happen time to time where the level isn't very clear and it rejects at a very weak level, or other factors come into play. But I'd say if you're looking for resistance levels and what ones to most pay attention to, you want to be looking at those ones with the big volume. So you want, if the average volume of it is 10 mil a day, you want those levels that have 40 mil, at least the average. I'd say just at least the average, and preferably 2 to 3 relative volume. So if the normal amount was 5 mil average a day, then I'm looking for at least 15 mil, 10 mil, 20 mil resistances. So yeah, keep that in mind. So it's the 1, 2, 3, and then 4, we're looking at the plan. So this is where you take those resistance levels into your setup. If you're doing, for example, a daily bounce shorting into, you want to know where those resistance levels are, what ones you're most confident in, what ones you maybe do small size, what ones you'll do bigger size, all that kind of stuff. So I think those are the main 4 things to planning your trades. And yeah, it's very simple. I can do a more in-depth one, but at the moment I think this is a great demonstration. Next, so this is my playbook for the bag holder setup. So as you know, I've taken you through my bag holder setup. Other people have done it before. I've just kind of, it's my own bag holder setup. I've categorized it as myself. This I think is really useful. You can use Notion to create these tables. So I make the table for stock selection, executions, entries and exits, and then when I'm wrong, when I should just get the hell out. So also I classify it by winter and summer, because I think there's a big difference. Winter can be hotter, and you'll get bigger gap ups, more squeezes, all that kind of stuff. And summer, you'll just have small ones and they'll probably die for most of the day, or there just won't be enough volume. So I do split them into 2 seasons, and the main things I look at is really the market cap, the float, the daily chart, what I'm looking for on it, the gap up of percentage, and the relative volume. I think all those things are very important, and you should probably have them in every setup. If you're day trading, I assume everyone's setup does have some kind of degree of this, because if your setup works better with higher floats, then you don't want to be doing it on a low float, you know? Very big differences. Next is the entries. You want to have a clear idea of where you want to enter, not just because, you know, there's been a rejection at like, I saw a big red candle, let me short it. Like, you know, you need something more exact. I still am working on getting mine a bit more exact, because sometimes I'm sloppy and I enter when I shouldn't. But yeah, you should have a key, like key levels. So I normally look for daily resistance above pre-market highs, VWAP, or high of day double top. Normally those I think are pretty good for me. And normally you want to time as well. If you think, well, you should be back testing, or, you know, journaling your trades so you know. But you should be knowing like what's the perfect time for your setup to work. So mine is normally before 10:30. Sometimes recently it's been working at 11 as well, so that's been kind of odd. But all those kind of things to keep track of. And then average to high of day. This is, I'm not 100% sure of how useful this is at the moment, but for me, I've been tracking for, I think, like 50 to 100 stocks of this setup. Like, how far do they get to high of day? Like, do they just drop off straight away? Are they, you know, pushing a bit and then dying and all that kind of stuff? So I try and keep track of that. And then for exits, I think this is really, really useful. I don't think a lot of people think enough about their exits, and I've seen some people like Brian Lee and many others say your exits are more important than your entries. And to some degree, I definitely agree, because you can have a pretty bad entry, but if you know when to get out and you know like when to hold, it can really make or break your trades. Though I think entries are very important as well, because if you have a bad entry, your risk is off. You're going to have to risk more than you want. Yeah, bad entries are definitely an issue, but I think bad exits are also an issue that most people don't pay attention to. So for me, I look for support areas, I'll take partials. VWAP, I'll take partials. 0.5 on the Fibonacci, I'll take 90%. And then for 0.382 or full gap fill on the daily, I'll take 100%. So kind of whatever it gets to first. Normally, it will get to 0.382 first because it is a bit before it. But, you know, if it's kind of close and it's still looking very weak, I'll look for the full gap fill. But yeah, no, I only take partials on these areas where I've normally seen they normally bounce and have a good chance of bouncing, but I'll just take a partial, because what I'm really looking for is like a full day move, or at least like a good, you know, a good hour or two move. And then I also track this on the average percent down from high of day. Normally it's, you know, it's quite a lot, 21% to 40% of the move is normally sold off. So it's normally pretty good. You can normally get a good amount of range into it. And then for when I want to get the hell out, if it opens with 1 mil volume and it just keeps on coming with green candles, and it's going to my rejection level, maybe I'll put small size, but, you know, I'm not going to short really heavy into that unless it's looking weak. Like, unless I can wait for confirmation and then I'll use full size. Higher lows, if it's just grinding up, no one wants to be in a grind up all day, so I normally just cut it. Sold off too much of the gap. This is the thing that's been killing me recently, is a lot of these stocks have been dying a lot in pre-market, and I try and short it way too early. It doesn't have enough range and it bounces on me, and I'm just taking losses for no reason, giving back money, and yeah, this is a big issue of mine at the moment. If it's not breaking down before 10:30, this one's been iffy because it's been changing recently, but as a general rule, I try to cut it if it doesn't break down before 10:30. And if it reclaims VWAP with higher buying volume, then I'll cut it. But a lot of the times you'll see it bounce to VWAP, maybe break it and then fade again. So you need to be like watching it quite intensely there. Next is the recap. So this is BPY. This was the Bed Bath and Beyond kind of squeeze that happened. It went from pretty much 16s to 26. And I think it was a meme squeeze, I believe, but it pretty much did a really nice gap fill, and then it even moved a bit higher. So when I was looking into this, was that normally I don't trade large caps, and this was on the bigger sides. It was 1.73 billion and 99 million float. So the float was still kind of not small, but, you know, it wasn't that huge. Sorry about that. And then let's take the intraday. So intraday, I wasn't too confident. As you can see, I did wait, but I was still able to get a good move. It was really, really weak straight into the open, and I've seen some people short it, and I congratulate them on that because that was a very good short if you got into it. It lined up perfectly with VWAP and all that. But I wasn't confident in it. I don't normally trade large caps, so I waited. And then got in on the bounces here pretty much. So I had clear risk, and this is a big thing I want to talk about as well, is if you're getting into a trade late, like a confirmation trade, you want to know where you're risking, very clear risk. And this is why waiting for confirmations normally is better. So I know if it breaks above here and it start making higher highs, I'm gonna cut that. Like that's not working for me. But it never did. It just kind of stayed along this level. I was in the red for a bit, and then it finally started to break down. I added to it because I was confident. I added more to it because I was still confident, and then I got a nice exit at 20.50, and my average was just about 21.75. So pretty almost got $1, almost. So yeah, it was a good trade. I'm very happy with it. And that's everything I wanted to take you through. Leave a comment below. Let me know if this video was useful or if there's anything else you want to know. I'm trying to provide as much useful content as I can for you guys. And yeah, that's it. Thank you very much.